Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Thursday, and we're here at the 20th of October, 2022, 7 p.m. All right, my friends. So we're still seeing the earnings coming out, swaying the markets both ways, back and forth, good and bad. It's just, it's one of these fights that the market is having. We're seeing the airline stocks still come up, but today you saw UAL was down along with Delta down. Real problem still for ARC. It doesn't seem to lift up one way or the other. As I take a look at the stock indices themselves, you know, as you take a look at some of them, your QQQ, DIA, everything's under a little bit of pressure. So we had that big bump upwards, as you know, getting us into, this is the beginning of the earnings seasons. Things are beating. And right now they're not beating. We're getting a lot of names that aren't good. Snap today down, 25% in the aftermarket, probably going to carry with it Meta, other things in the morning. You got to pay attention to that. As for our wild man, the richest man in the world and one of the world's geniuses, if not the genius, our Einstein type guy, certainly in business, Twitter. Twitter's going up as the deal looks more and more certain. It has to take place by the 28th. Today's the 20th, so you're a week from tomorrow that it has to take place. And to celebrate that, Mr. Musk today said that he's going to fire, upon his completion of the deal, 75% of the employees. I'm not making this stuff up. Now, something doesn't make sense to me. There's always more to his stories. You're not going to pay $44 billion and destroy the company. Don't know what his new plan is. He's got one. Okay, and it's going to be well thought out. And with this type of money at stake, whatever it is, it is. However, it's a jolt. Okay, I would be scared if I were working there. It's a jolt. And it's another group of layoffs taking place. Is he going to replace him with a different type of person? Is he going to go for something to monetize Twitter in a different way, and he needs people to do that? We don't know what the game is. He's not going to share that at this point in time. So those are the things to look at. In Britain, you know that they lost their prime minister. 44 days, the shortest of all time. I imagine it could be shorter if somebody took the office and died, but to resign in 44 days. And the reason was the undoing that we talked about here in all my other videos. When she came out, she sounded like President Erdogan. The way to beat inflation is to spend more, cut the income taxes for people. It'll make the economy grow to make things better. She's gone. Erdogan is different, okay? Same problem, though. Believe me, same problem. So who's going to win? I'll give you the scariest thing for some of you of all. The candidates are all coming out. This all happens very, very fast. I write about it in my newsletter tonight. Boris Johnson's name is back. You heard me. Boris Johnson's name is back. A lot of people owe him in his party, and he might be one of the key contenders here. Can you imagine if he won, what that would do to invigorate President Trump? Can you just imagine what would go on in President Trump's mind? I can't, but I would imagine it gives him all the energy he needs to really pounce. Okay. So, Walgreens, we've been talking about it. You've had your bounce and you're sort of just stuck here. Now, there's a lot of things on this chart that can happen. You could argue you've got a shoulder, all through here, a head. And if you flipped it over, you could get up over $36 if the market wanted to start running. If the market starts failing and gets under this level, let's call it 32.5, it could get very ugly in the chart all of a sudden, slipping back, going for those lows again. You're at a funny spot in the chart. The pattern has got higher lows, higher highs. The market is over the 18-day average, so that means the bias is to the upside. The bulls are in control. They'll defend that market, but if it gets down to the 18-day average, do you think they'll defend it? I don't. Why? Because the last break low was 32.70. That would change the pattern on the chart. You wouldn't have your higher highs, higher lows. You'd probably go into a funk, and that's why I mentioned to you 32.50. If you get under that, for me, I'd want to walk away from this. If it can go up anymore, I think you've got to do just what you did already. You had one run at the upper Bollinger Band. What do I teach you in my enhanced Bollinger Band course? Get out of the market if you get up there on the first run. If you're not embedded, you're not embedded. That's where I think the pros came out. The people that hold on too long, they're still holding and they missed it. They're trying now to get a rally to get out up there. And as I said, I think the easy money's out of this and it's overbought. Netflix, okay, we just talked last night. What did I say on it? I made it very clear that in my opinion, because the market closed over the 18-day average, the next objective was the 200-day, and it'd be a hard number to get over. Why? A 200-day moving average is the equivalent of 4 years of a price average, 52 weeks. Just think about it. And that's what you're dealing with there, okay? On a yearly basis, 200-week and monthly, the first challenge, I look at them from monthly, daily, weekly. And when you get up here for the 200-day, it's a 1 year average, not a 4, a 1. And when I go to the weekly charts, it's a 4. I may have said that to confuse you, confused me, but that's what it is. No, you get up to those numbers, they're so big that algorithms, I think, I can't prove this, but I think that they say, hey, the probabilities, you're overbought, you're up to that number, that's a zone to take money off the table. That's what I think is going on. That does not mean it's a top. What I will say, it's 2 days over the upper band. You only stay 5 days maximum, typically, over a band. You pull in because 95% of the time you do that. So you've had a surge, the easy money's out of the way, earnings did help the market. Now you got to deal with interest rate hikes that are coming at you right around the corner. Apple, this is a pause. I think it's done pretty much as good as it's going to do in the short term. I'd be very careful. If this market gets underneath 140, 150, you could get lower highs, lower lows, and you're opening the door up for down here again. Do I think there's much upside? I'll be surprised if there is. Let me go on record. If you're a buyer here at 143.07 and you got your stop under there, you're looking maybe to 151.20 to 150.50. The combination of the 100-day average and the upper Bollinger Band. I think the bears are going to play this in a more aggressive way. Just what I'm looking at, my instinct. Disney had its pop off Netflix. I said this yesterday. Everybody got carried with it that has streaming to the upside off that. You went to the Bollinger Band and you've immediately backed away from that number. You're overbought. You're in an uptrend. I see that. Support, 97.21. If traders buy it, they'll probably risk no more than 96.26. And if it gets under that, they'll run. That's what I think. XLF, where did you peak out? Again, take a look at the Bollinger Band, the first challenge. Take a look at the Bollinger Band, the first challenge on the downside. Learn to work with this, but it's crucial that you learn it with the slow stochastic, not just on its own. In XLI, I'm a broken record on all these, and it's boring doing them sometimes, these reviews, because it's the same thing. You got there, and you fell right back. Is there anything I would tell one of my clients to do in this market? I can actually tell you no. I tell them, hands in your pocket. Now that money was made, you move to another chart pattern that might have more promise. Semiconductors, you've been bouncing from an oversold condition, a point to be made. You got to the lower Bollinger Band for the first time here. Have you made any money in reality if you came out there? Did you miss anything? The answer is no. You're waiting to see, can you re-embed? The trend is still down. It hasn't changed. In fact, it picks up momentum if you take out today's lows, but it's so oversold that on my technique, it doesn't tell me that I tell anybody to do anything. What would you do if you're a home builder trader, trading XHB, and today the market's coming down like it is? Okay, you saw what it did there. You're looking to cover your shorts. You're not looking to add. You're looking to cover your shorts. It's oversold. That's what I think is going on. XLE, energy is still looking good. Still looking good. Market's got an embedded reading or not. Let's count this together. Both numbers are over 80. Both numbers yesterday, over 80. Both numbers the day before, over 80. And over 80. And over 80. I can go on and on. So that tells me on pullbacks, The pros are going to buy this, and they will buy it until the red line closes underneath 80. There's a way to buy it. I teach it in the enhanced course. It's not just sticking your neck out there. There's a way to do it. And you're out if that happens. And it will happen eventually, okay? Markets eventually, bull markets end, bear markets end, trends within the market end too. But until that's over, you haven't hit that upper band, you could easily be going there. In the gold, I am in the bear camp. I'm still looking for lower prices. No, you will not attract me to tell my clients to go short when you're that oversold. But I'm certainly in the bear camp thinking you're headed to lower prices here because of what? Because of the headwind of the strong dollar and interest rates continuing to rise. Can you imagine how much more pain we'd have on a flash if the December jobs and CPI, remember what I said, December, not November, are ugly. You're going to see the November number, so we'll have an idea how you're going to play December. I got to look to see when the FOMC meeting is in December. I don't have the date in front of me, and I want to see where the CPI and jobs data are. If they're in front of it, it's even better. If they're after it, I don't know what you do with that. But we're going to have an idea of everything, certainly from the November numbers, and what everybody's got their fingers crossed on is that inflation starts to react to these high interest rates, and we don't have to break the back of the market in order to get that inflation to break. That is the hope that everybody has, okay? It's very difficult to get a soft landing. I know everybody wants it. History's not in the favor of that. In the copper market, this is still a bear market. Lower highs, lower lows. However, it is oversold. And as I tell my traders in futures, when you have an event like the Party Congress going on in China, and they consume 50% of the world's copper, and they have a major, I can't put enough majors here, property event. They haven't made mention of it yet. The convention, I think, ends on Sunday. I tell them to step back. All that you need here is say that they come out suddenly and say, we're going to do this for the property market, and as for our growth, we're going to do this for infrastructure. Remember, they're setting their 5-year plan. You can get your head handed to you. Why copper? Because the biggest consumer in the world of copper is who? China. The other part you always pay attention to is how much supply is there. You know, you've got to start removing the supply of copper that the Western world would take from Russia. Russia's a pariah. You're not going to want any products. Aluminum, they'll go to China. China's going to take their aluminum and resell it to the rest of the world. That is what's going to happen. Copper, they have to take the copper that they get from China. That's where it's going to go. The problem is Codelco and the other companies are telling you they can't meet the production requirements. They're going to operate as a total, as a deficit. Problems galore, energy related in part. Many of these mines can't get the necessary juice from the countries they're in to operate these big mines. So different problems brewing in many places. TLT. I'm a bear. Until there's a reason to think that interest rates have topped, there isn't. Just because you decided that they're high enough, it's not enough. The Fed told you how they're going to do it. It's data dependent. Yes, there's an art to looking at the data. Here's the art. They want to see the numbers fall. You got your master's degree in it. They want to see the numbers fall, and they want to see them fall again to get an idea. That part's there. Then they can argue, how do they get the full genie in the bottle? Is 2% a real number they got to fight for? Maybe the real world today's a 3% number. You're not at that argument. You're at the argument, when do we see the peak? And don't guess it. Guessing the pivot is crazy. The numbers will tell you where that is. Right now, you get rallies. What do you want to be? Bearish. UUP, are you stuck at the 18-day average? My God, you are so stuck at this number. I don't know what to make of that. It's just sort of stuck right there, as FXE is stuck. Are we going to get a bearishness here by getting underneath 90.10 and the dollar stays up? It's got the makings of that. So again, I want to remind you, there are some tools that I think you can have some fun working with. Pivot points is one of these tools. What do I mean by that? Well, what a pivot point helps you do is if you're vying for a position during the day, the way this works, and it's a very popular tool, you probably have it in your charting software. You probably don't know how to use it. You're wondering what it is. I created a free, and I know that gets many of you excited, a free mini course on how to do this, how you work with it, how you set up your charts, and the reality of it with momentum of the slow stochastic. So how I use it is if I think that I want to be a buyer or seller of something and I'm close to a number, should I reach for it or not becomes a big question. Here's how other traders play with it. I have a lot of people that are just day traders. They buy and sell all day long in the futures markets. That's it. They're day traders. When I had a stock firm, same thing. They buy and sell. This is one of the popular tools. Once you master this, you get a different edge over the guy next to you if you understand what that is, all right? Because you're playing momentum and timing of the market in a small scale. You know what size charts this works the best in? 15-minute. So if you'd like to learn something, it's free again. It's a video series that I put together. Go to my website under free offers or just come up here, move your cursor. You'll see the icon. Give it a click and away you go. I'm Ira Epstein. Have yourselves a great evening. I'll see you all tomorrow.